Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.
The turnaround continues. Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Mining Forum Americas in Colorado Springs. Joining me today is Patrick Godin, CEO of New Gold. Patrick, welcome back to Kitco.
Thank you.
Your performance is rapidly improving now, 96,000 ounces of production in the second quarter at an all-in sustaining cost of about $1,400 per ounce. Your share price is up 125% over the past year. You now have a market capitalization of $5 billion. Congratulations. You were smiling when we met at BMO Metals and Mining earlier this year. You must be really ecstatic now with the performance so far this year.
I'm always smiling. But I'm really pleased by the performance, yes. Yeah, things that we can control, things that we cannot control. What we can control is the execution of our plan and to deliver our guidance. And I think based on the fact that the gold is performing extremely well, people are seeing values. So I think it's really pleased.
What are the things you're most pleased about in terms of the company's performance and the overall turnaround?
But first, we have the execution of the project for sure that are on time and on schedule and on budget. But what is important is the exploration success. And so we had a strategic objective. So we really like both assets. Both are adding a lot of value. Rainy River on the short term will create a lot of cash flow. And in the next 2 years, it's going to be nice. And we're looking good to increase production and to maintain high level of production in the following years. But in terms of New Afton, I think we're ramping up. We see a slight appreciation in copper price too. We should keep in mind that it's significant for us. And at New Afton, we invest a lot in explorations, and we're pretty successful with the discovery of Key Zone. So it's an asset that is well localized in BC. It's one of the best residential mines in Canada. We have a really strong workforce that my colleagues are great and they are competent and they are re-engaged. We have a strong social acceptability with SSN, and in our local, we are a significant social contributor to the economy of Kamloops, and our objective was to bring New Afton beyond 2040. And with the recent development in Key Zone, we're really excited.
Okay. Now, obviously, one of the great things about the turnaround and the higher gold prices, you mentioned that you can invest more in exploration, and you restarted the exploration effort, relatively recently. With both Rainy River in Ontario and New Afton in British Columbia, what kind of vision does that give you for those assets going forward? Where do you think you can get them to?
Okay, so for New Afton, it will be Key Zone actually C Zone will bring us up to the end of 2031, beginning of 2032. We did it well actually with both B3 was overperforming and C Zone that we're doing well. However, it's 2031, 2032 is short in terms of what we look at. When we look at Key Zone, actually, it's extremely promising. We have a new structure that is 900 meter high, 600 meter wide, and the thickness is more than 180 in terms of the global envelope. It's still open. We opened on the east side of the property too. We announced that last week, and the drilling that we are doing now is really promising too. So, objective for us is to bring this mine beyond 2040. And I think it's really promising for us. At Rainy River for exploration, our objective was to increase the NAV. So every year, last year we bought phase 5, so it's increasing the open pit activities up to the end of 27. We work really hard on Northwest Strand. It will increase the open pit. We'll keep the open pit mining up going to 2028. So it means that the open pit the mill will run at full capacity, probably up to the end of 2030. So it will increase the ore production for this period by mostly 130,000 ounces of gold. It's good. So it's excellent without capex investment other than pushback. And also we did well in the exploration underground at Rainy River. So and it will extend the mine life and improve the grade going forward. However, we never explore on our land package. We never. The main objective of my predecessor was to make it work. I'm talking about Rainy River, and they did good work in this circumstance, excellent work. But they never had a chance to spend money on the property. And when we see Rainy River, it's connected to the grid. It's an excellent mill. People, our local workforce is excellent. If we discover another Rainy River tomorrow morning in our land package, we don't have to build a tailings storage facility because the pit will be the tailings storage facility. And it's really significant for us because on a CapEx point of view, the tailings storage facility is requiring a lot of capital and attention. So we want to give it a try, and we will invest more massively in exploration next year.
What sort of investment are you looking at in terms of the exploration ramp up there?
I don't want to limit my people because when so this year we said
That's a good boss for a geo.
Yeah. And I'm a mining engineer. I'm not a geologist, but I strongly believe that it's where we will add value to the shareholders first, and with a highest return. So this year we plan a budget of $30 million US. We'll spend probably around 36, and maybe more if we need more to complete the drilling. And next year, if we have to invest around the same amount at New Afton and more at Rainy River, it's a good investment for shareholders.
Okay. With the turnaround of the company, you've got both assets operating very, very well. You're seeing upside potential and mine life extension at both of those. But as I mentioned, you're a $5 billion company now. You're a mid-cap producer. At what moment would it be right for New Gold to perhaps contemplate bringing in another asset, a third asset, having a bit more bench strength from that point of view?
At any time. It's to be honest. By nature, we need to renew what we mined. We are active in this. The easy one for us was to buy back our own asset when we were at New Afton. What we did, we completed the last transaction in May this year. So that was the easy one, low risk in terms of due diligence.
That was with Ontario TG.
Yeah. So now, yes, we are, and again, the high return, low risk is to do exploration in our own package. What we're doing, we are active in the landscape to look for other opportunities. We're looking at stuff, and so we need just to be patient and to find where we can really add value, not only with investment, but with our people in our knowledge. And we are pretty active for this.
Now, you've got operations in Ontario and British Columbia and Canada. Obviously, you've got key strong points there. Is that where you're looking at potential acquisitions?
I work overseas, so we have certain element. We'll try to stay in Americas. So we have some U.S. can be a nice place to work too. Our peers are performing extremely well there. But I work in South America, my colleagues too, so we are open to diversify in Americas mostly.
Okay, I want to sort of broaden that concept out a bit. We've seen divestitures by Newmont and Barrick more recently, which has created a number of new single asset mid-tier producers, which all need development pipelines. How do you see the competitive landscape evolving? Because you're looking for projects, everybody else is looking for projects. How is the competitive landscape now?
It's becoming more difficult. And I think what is more difficult too is because it's more difficult for the junior and the developers to raise money too. It's pretty surprising because the gold price is performing well, but it's still tight in terms of market. And also the developers, it's the permitting process is not a walk in the park for them too. I'm not blaming them. I'm saying it's difficult, and the social acceptability is more difficult to get. And expectations are difficult to fulfill too at some stage, and we can see that. And at the end of the day, we're more to look for, and there are less to develop too. So we have projects in this that are existing since a while, but I think it's workable. At some stage, we'll have to put ourselves. As you talk about, everybody's looking for a future, but we'll have to build assets together too at some stage. So I think I'm seeing that you can see that as problematic or challenging. Me, I'm seeing that as an opportunity too. So,
New Gold has been a rare company in some ways because with the production expansion, you've actually been able to bring your costs down at a time when most other producers are seeing their costs increase. To what extent do you think it's still possible for producers to control costs, or is that sort of 10% increase year on year, is that the new normal?
We have two facets here. So I think you're talking about the cost of our commodities and the workforce. I think in Canada we're pretty stable. We're following. So we have the tariffs that will impact us at some stage. If it's not, but I think it's not. It's not really in the price of our consumable actually, but it will. But we have to keep in mind that the grade of the ore body that we are mining are depleting too. And it's one of the biggest factors that we are facing. Costs and people, we're increasing mostly by 3% per year. So we have some costs that we have. We have the productivity also. We have our high skill and high performer people who are leaving the industry. So we have to replace them. And it's normal at this stage and people are getting retired earlier than in the past. So basically we have this last runway that we are missing. But in general also, if you look at the grade of the ore body that we're mining and the grade 20 years ago, it's depleting. And it's having a significant impact on the AISC too at some stage. So it's a factor that we need to consider.
I've got a couple of follow-up points there. You mentioned about people leaving the industry. With higher commodities prices, a lot of people in the industry also invest in mining stocks. With the higher prices, people are making a lot of money. So it's quite possible that a lot of people will make enough money that they'll say, I don't need to drive a truck anymore, I don't need to work underground. And is that a problem that's going to come around the corner at some point? The prices are so high, the stock prices are so high.
So for sure our employees are investing. Yes, some are participating to our stock. But for them, it's mostly the difficulties to attract new generation in regions that is becoming more difficult for us. And it's in all the aspects of our business. So I worked in Val-d'Or during 13 years. It's a mining town. It's a pure mining town. And can you imagine that people are doing fly in, fly out in region like Abitibi? It's not something that never imagined that because I was living there. We had our 3 kids there, so it was a family town. So it was a nice place to raise a family. It's still the case, but it's difficult for us to attract people in regions. We need to build camps, and it's where we're impacting social acceptability. So it's a catch-22 years mostly.
Okay.
But
and another
in terms of if people are leaving the industry in my generation, I'm having a lot of my colleagues who were at school with me who are retiring since a while.
Okay. The other thing that higher prices do is potentially changes your resources and reserves, because if you're using a higher price, you can or marginal material becomes ore. How are you looking at managing that aspect?
At both sides, it's not necessarily it's not a significant trigger the price itself. It's as Rainy River. If we increase the gold price, it will maybe have a slight increase, but not so significant. Because at Rainy River, at some stage, we are at a position in the pit where we have a lot to push back if we want to go deeper. So that's why we went underground. So it will not necessarily add additional reserve in the pit because we have a higher gold price. But it's maybe at New Afton is a factor that will be significant. Yes.
Okay. Well, let's talk about your balance sheet now. You still have a lot of net debt, and in the second quarter you had a working capital deficit. With the higher gold price, what does that do to your plans for your balance sheet, and to what extent can you accelerate those plans?
Well, for sure, we generate cash flow at Rainy River. We start to generate a significant amount of cash flow at Rainy River, so it's significant. So we did extremely well in Q2. To buy back the last tranche of teachers, we draw a revolver facility and we put in place a prepay. So we didn't want to raise equity for that, and I think it was the best thing that we did because we didn't want to dilute our shareholders. But mostly, we will at year end the revolver will be totally reimbursed. I think that we have a healthy debt, so we refinanced the term of the bond and we for better terms. And it's on the balance sheet and it's $400 million US. So I think it's healthy for us. But at the end of the next year and the end of this year and mostly next year, we'll generate a lot of cash flow. Yes, we'll continue to invest in exploration. Yes, we can anticipate investment in key zone, but we'll generate cash. And if we're not having an appropriate investment to propose to our shareholders on a project or M&A, whatever, at some stage we'll have to return part of this money to them. And it's something that we contemplate.
What are you thinking in terms of your shareholder returns policy? Will that be a percentage of free cash flow, or how are you thinking that you may approach that?
It can be we're looking for maybe it can be a percentage of the free cash flow. We don't want to fix an amount of money because at some stage also I think it's what is adding value when you're doing a share buyback, by example, is to be opportunistic. So Everything the stock is performing well, but it will happen that for X reason, whatever, the stock price will deplete a bit or whatever. So the stock will be impacted by this. It's an opportunity to buy back shares. To buy when you're fully valued, sometimes we have to think about this.
Okay, so buybacks and dividend, maybe a mix of the both.
We'll see.
Okay, you've got a lot going on, Patrick. So maybe let's end with what are going to be some of the key catalysts for the companies over the next 6 to 12 months that our viewers should watch out for.
I think it's going to deliver on the guidance and confirm our cash flow generation. So I think it's important, really important, is to deliver indicated resources for key zone at the beginning of next year. I think it's going to be really significant. I really trust it's going to be significant.
Forward-looking statement.
Yeah. But I think if you look at the intersection that we present, it's important. I think it's because it will drive a feasibility study that we will initiate next year, and to have a feasibility study and reserve for 27. So I think it's one of the next catalysts, and we are well aligned also to maintain our guidance for 26 and 27. So I think it's going to be a good catalyst for us.
Excellent. Well, congratulations on a great 2025 today. Patrick Godin, thank you very much for joining us today.
Pleasure. Thank you.
And we have a lot more to come from the 2025 Mining Forum Americas here in Colorado Springs, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.